All right, let's dive in. Today we're going deep on the Bitcoin Fear and Greed Index. You sent over this transcript from a Benjamin Cowan video, and, well, what we're trying to do here is figure out how this thing works, what it's telling us about the market, especially now, and, maybe get some insight into whether we're going to see this legendary alt season everyone keeps talking about.
Yeah, it seems like everyone's waiting for the alts to take off.
Exactly. So this transcript is our main source today, and we're going to break it down piece by piece. So first off, for anyone who might not be totally familiar with this, what exactly is the Bitcoin Fear and Greed Index?
Okay, so basically this index, it's trying to gauge the overall sentiment of the crypto market.
Yeah.
Like, is everyone super hyped and greedy, or are they scared and panicking? It tries to capture that mood.
Okay, got it. But how does it actually measure that mood? I mean, isn't it all just tied to the price of Bitcoin?
That's what's interesting. It's not just about the price. It's more nuanced than that. So the index right now, it's at 46.
46. Okay.
Which puts it in like a neutral zone. The scale goes from 0, which is pure panic, to 100, which is, total greed euphoria.
So 46. Not too greedy, not too fearful, kind of just vibing.
Right, exactly. It's kind of like the market's just chilling. But here's the thing. This 46, it's not just based on Bitcoin's price. It takes into account a bunch of different stuff, like how much the price is swinging around volatility.
Right, volatility. So like big price swings would mean more fear or greed depending on which way it's swinging, I guess.
Yeah, exactly. And then it also looks at market momentum. Like, is the price trending up or down? And also trading volume. So how much Bitcoin is actually changing hands?
Makes sense. So more buying and selling could point to stronger feelings one way or the other.
Uh-huh. Then there's the social media side of things.
Yeah.
The index looks at what people are saying online about Bitcoin. Are they hyped or are they freaking out?
Oh, so it's like sentiment analysis on all the tweets and posts.
Exactly. And then another big factor is Bitcoin's dominance. Like, what percentage of the total crypto market cap is made up of Bitcoin?
Right, because if Bitcoin's dominance is really high, that might mean people are playing it safe. Maybe a bit more fearful.
Yeah, potentially. And then they also factor in historical trends, like how has the market reacted in the past when similar things have happened?
So it's like a whole mix of different signals to get a more complete picture of how the market's feeling.
Right. And actually, there used to be surveys, too, like they'd ask people directly how they were feeling. But they've paused those for now.
Interesting. So it's not a perfect science, but they're trying to get a good read on the market's psyche.
Yeah, and that's important because, as much as we like to pretend we're all rational actors, emotions play a huge role in the market.
Oh, absolutely. Fear and greed drive so many decisions, especially in crypto where things can move so fast.
Exactly. So this index, it's trying to give us a way to quantify those emotions a little bit.
Right, makes sense. But I do remember from the video that Cowan had a pretty strong warning about using this index as your only guide.
Oh, yeah. He was very clear about that. You can't just blindly follow the fear and greed index. Like any indicator, it has its limitations.
So what were some of the examples he gave?
Well, he used a really good one from 2021. So imagine you were following the index.
Yeah.
And you decided to sell all your Bitcoin the second it hit 90.
Okay, so maximum greed. Time to get out.
Right. That's what a lot of people might think.
Yeah.
But the thing is, back then in 2021, when the index hit 90, Bitcoin was only around $15,600.
Oh, wow. So if you had sold, then you would have missed out on all those gains that came after.
Exactly. And the index stayed in the 90s for quite a while after that. So you'd have left a lot of money on the table.
That's a pretty compelling argument against just blindly selling when the index gets high.
Yeah, it shows that the index, it's more of a snapshot of market sentiment. It's not a crystal ball that tells you exactly when to buy or sell.
Right. It's a piece of the puzzle, but not the whole puzzle.
Exactly. You have to consider other factors too, like your own risk tolerance, investment goals, all that stuff.
So the Fear and Greed Index. It's a tool, but not the only tool, and it's important to use it wisely.
Right. It can give you some valuable insights, but you have to be careful not to overreact to every little wiggle.
Now, I remember that the transcript also mentioned using moving averages to get a more stable view of the index.
Yeah, that's a really interesting concept. So instead of just looking at the daily fear and greed number, you can smooth it out by using a moving average.
Okay, so how does that work?
Well, let's say you use a 30-day moving average. So each day, you take the average of the fear and greed index values from the past 30 days.
So it's like averaging out the daily ups and downs to see the bigger trend.
Yeah, exactly. It helps you filter out some of the noise and get a clearer picture of the overall sentiment direction.
So is there an example of how that might have been useful in the past?
Yeah, the transcript mentioned one from late 2020. So back then, the 30-day moving average of the index, it actually got into the 90s when Bitcoin was around $42,000.
Hmm, interesting. So by using the moving average, you would have seen a stronger signal of greed even though the daily index might have been jumping around.
Right, and that could have been a good confirmation that the market was really in a greedy phase.
Okay, so using moving averages, it's like a way to double check the index and see if the sentiment is really as strong as it seems.
Exactly. It helps you avoid those knee-jerk reactions to short-term fluctuations.
Right, because those can be misleading.
Uh-huh. And this brings us to the big question on everyone's mind, alt season.
Mm,
When are the alts going to pump?
yeah, that's the million-dollar question, or maybe the Bitcoin question these days.
Right. So how does this all relate to art season? Well, the transcript suggests that there might be a connection between the fear and greed index and those periods when altcoins really outperform Bitcoin.
Okay, I'm listening.
So if we look back at history, those big alt seasons,
Hmm.
like the one in early 2021, or maybe even back in 2017, they often happen when the fear and greed index stayed super high in the 90s for a long time.
So it's like once Bitcoin has had its run and everyone's still super greedy, that's when they start looking for the next big thing.
Yeah, that's the idea. The enthusiasm kind of spills over from Bitcoin into the altcoin market.
Okay, so sustained greed in the index could be a sign that an alt season is brewing.
Potentially.
Hmm.
But here's the catch. Cowan points out that this time around, it's been different.
Different how?
Well, we have seen the index go above 90 a few times,
Mhm.
but it's only stayed there for a day or two. Then it drops back down.
Oh, so those bursts of extreme greed, they haven't really lasted.
Exactly. And that's a key difference from those past alt-season cycles.
Mm.
So it's possible that this time around, the greed just isn't strong enough or sustained enough to really kick off a proper alt-season.
So we might be seeing those little sparks of excitement, but they're fizzling out before they can really ignite anything.
Right. And another thing to consider, the market tends to correct after Bitcoin goes on a run. And we haven't really seen a sustained period of greed after those corrections.
So it's like Bitcoin pumps, then maybe pulls back a bit, and then instead of everyone piling back in, the mood just kind of cools off.
Yeah, exactly. It's not the same kind of euphoria that we saw in those past cycles.
Interesting. And the transcript also pointed out that what we're seeing now, it actually has some similarities to what happened in 2019 and early 2024.
Yeah, that's right. So in those years, we also saw these brief spikes above 90 on the fear and greed index,
Mm.
but they didn't last long.
So it was like a little tease, but no real alt season follow.
Right. And the transcript highlights that the pattern back in 2019 was pretty similar. The index went up, then came down, and then the next time Bitcoin's price peaked, the fear and greed index was actually lower than it was before.
Huh. So even though Bitcoin went up again, the overall market sentiment wasn't as greedy.
Yeah, and we saw something similar happen earlier this year in 2024. So it's like those little bursts of greed, they're not always a reliable sign that an alt season is about to explode.
Okay, so maybe we need to be looking for something more than just a quick spike in the index.
Right, exactly. And that's where this idea of social risk comes in.
Social risk. Okay, this is a new one. Fill me in.
So this is another factor that Cowan talks about in the transcript. He says that alt seasons tend to happen when there's high social risk.
And what does that mean exactly?
Well, from what I gather, it seems to be a measure of how much buzz and hype there is around crypto online. Like how much people are talking about it and sharing it.
So it's like a measure of the social contagion. Is crypto going viral?
Yeah, kinda. And he mentions that there's a specific metric for this that goes from like 0.9 to 1 when social risk is really high.
Okay, so if this metric is up near 1, that's when people are going crazy for crypto.
Right. And he says that during those past alt seasons, this social risk metric was way up there.
But what about now? What's the social risk like at the moment?
Well, according to the transcript, at the time of the video, it was only at 0.017.
0.017. Wow, so that's super low.
Yeah, incredibly low.
Yeah.
And he said it's been like that since September of last year.
So basically, no one's really talking about crypto that much anyway.
Not as much as they were during those past hype cycles.
And that could be why Bitcoin is still dominating, why people aren't rushing into alts.
Yeah, if there's not a lot of buzz around altcoins, then they're less likely to pump.
That makes sense. So we're missing that social frenzy, that fear of missing out that drives those alt seasons.
Right. And there's another interesting theory that Cowan brings up. That might explain why things are different this time around.
Okay, what's the theory?
Well, he suggests that it might be because of monetary policy, like what the Federal Reserve and other central banks are doing with interest rates.
Oh, interesting. So he's connecting crypto market cycles to the broader economic picture.
Exactly. He says that the current monetary policy,
Right.
which is pretty restrictive,
Yeah.
it could be one of the reasons why we're not seeing that sustained greed that usually fuels alt seasons.
Okay, so explain that to me. How does that work?
Well, basically, when interest rates are low
Yeah.
and the Fed is pumping money into the economy, it's easier for people to borrow money and speculate.
Right. So there's more money sloshing around.
Yeah.
And some of it ends up in crypto.
Uh-huh. And that can lead to those periods of extreme exuberance and risk-taking.
But right now, interest rates are higher, and the Fed is actually trying to reduce the money supply.
Exactly. So it's a much tighter environment. And that could be one of the reasons why we're not seeing that same level of crazy speculation.
So it's like the party's over, the Fed's taken away the punch bowl.
Kinda. And Cowen specifically contrasts this to what was happening in late 2020 and early 2021.
Which was peak cryptomania.
Right. Yeah, exactly. Back then, interest rates were super low, and the Fed was doing all this quantitative easing, pumping money into the economy.
So everyone was flush with cash, and they
No.
were throwing it at anything that looked like it might go up.
Right, including crypto. And he points out that historically, those big altcoin rallies, they often came after periods of significant rate cuts and the end of quantitative tightening.
So it's like the Fed loosens things up, money gets cheap,
Yeah,
and then the altcoins go wild.
yeah, that's the pattern he's observed. But this time around, it's different. The Fed's actually raising rates, and that could be putting a damper on the altcoin market.
Makes sense. So it's not just about what's happening within the crypto market itself. We have to consider the bigger economic forces at play, too.
Right. And then finally, the transcript compares the recent Bitcoin rallies to the ones that led to those past alt seasons.
Okay, so what's the difference there?
Well, the rally that led to the last big alt season, back in 2020 and 2021, Bitcoin went from like $10,000 to $60,000 in just a few months.
Wow, that's a massive jump.
Yeah, a six-fold increase. So it was a huge parabolic move.
That's the kind of move that gets people really excited and maybe makes them more willing to gamble on altcoins.
Exactly. But the rallies we've seen more recently, they haven't been as dramatic.
So even though Bitcoin's price has gone up, it hasn't been that same kind of insane vertical climb.
Right. And that could be another reason why we're not seeing that same level of greed and speculation spill over into the altcoin market.
Because people aren't getting as hyped about Bitcoin's gains.
Yeah, they might be thinking, okay, Bitcoin's doing well, but it's not going completely parabolic. So maybe I don't need to rush into those risky altcoins.
Right. It's all about managing that risk-reward balance.
Exactly. So to sum it all up, it seems like there are a few key factors that are contributing to this lack of a sustained alt season.
Okay, let's recap. What are the main takeaways here?
Well, first, the Fear and Greed Index. It's a useful tool, but it's not perfect. And you can't just blindly follow it.
Right. Don't sell everything just because it hits 90.
Exactly. And it's helpful to use moving averages to smooth out the daily fluctuations and get a clearer picture of the trend.
Okay, good point. So smooth out that noise.
Right. And then when we look at those past alt seasons, they were marked by sustained periods of extreme greed on the index. But we haven't really seen that this time around.
Those bursts of greed have been short-lived.
Yeah. And that could be because of a few things, like the low social risk around crypto right now,
People just aren't as hyped.
and also the restrictive monetary policy,
Yeah.
which is making it harder for people to speculate.
The Fed's keeping things tight.
Exactly. And then finally, the recent Bitcoin rallies haven't been as explosive as the ones that preceded those past alt seasons.
So the games haven't been as crazy. And that's probably tempering the excitement a bit.
Right. So it's a complex mix of factors, but hopefully that gives us a better understanding of why the altcoin market is behaving the way it is.
Absolutely. This has been super insightful. So for everyone listening out there, the key takeaway is that the Fear and Greed Index, it can be a valuable tool, but you have to use it in context.
Yeah.
And consider all these other factors that we've talked about.
Right. It's just one piece of the puzzle.
Exactly. And it's important to remember that the market is constantly evolving. So what worked in the past might not work in the future.
And that's what makes it so fascinating.
Right.
Yeah.
Exactly. So keep learning, keep exploring, and don't be afraid to challenge your assumptions.
That's the key to success in this space.
Absolutely. So with that in mind, here's a final thought for you to chew on. As you continue your crypto journey, given all these historical patterns and the potential impact of things like monetary policy and social sentiment, what other indicators or factors do you think might be worth tracking alongside the Fear and Greed Index?
Yeah. What else can you add to your toolkit to get an even better grasp of where the market might be heading?
That's the question. And the answer, well, that's up to you to discover. Thanks for joining us on this deep dive into the Bitcoin Fear and Greed Index.
It's been a pleasure. Until next time.
Take care.
You too.
All right.